The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, the US dollar has come under increasing pressure, with its recent decline reflecting a complex mix of cyclical growth concerns and deeper structural anxieties around US economic and political stability. Investors are responding not just by moving out of the dollar, but by seeking alternatives that are perceived as safer or more stable, including gold, which has surged over 30% this year. Yet despite widespread discomfort with the U.S., there remains little clarity on which major currencies are poised to lead. So what does this mean for the dollar in the months ahead? Can the U.S. dollar extend its decline? And where should investors be looking for relative value as traditional safe havens evolve? Well, to find out more, joining me now is Sim Moh Siong, who is the currency strategist at the Bank of Singapore. Moh Siong, thank you so much for joining me once again.
Thanks for inviting me, Hongbin. Good to be back.
Good to have you on again. Moh Siong, now the U.S. dollar extended losses last week following its biggest decline in more than 3 weeks overnight after weaker than expected U.S. consumer inflation data bolstered the case for the Fed easing. Just as, global trade tensions cooled, how much has the USD fallen and what's been contributing to the decline in the greenback?
So the US dollar index, or the DXY, has benefited from lower US recession risk following the US-China trade truce, but the DXY is still about 7% below the level that it started the year with. The US economic outlook is less dire, but it's not out of the woods. And the dollar decline also reflects deeper concerns with global trust and reliance on the dollar that was built up over half a century or more.
Well, Moh Siong, since early April, interest rates on long-term U.S. government debt have risen, even as the perceived risk of a recession, which typically drives rates down, have also increased. Now, the USD weakened even though interest rates went up. So why was this the case? Is this common for developed economies like the U.S.?
Well, it's not common, but the episode of falling stock markets, rising bond yields, and a weaker currency in early April suggests that people were pulling out of U.S. assets. The long-term interest rates were up even though the perceived recession risk went down, and the dollar was down even though interest rates were up. So this combination of a rising long-term interest rates and a depreciating currency is something we often see in emerging markets, but it's not normal for developed economies like the U.S.
Well, recent questions about Fed independence looks like another recipe for a weaker USD. So, Moh Siong, to what extent do concerns over Federal Reserve independence, particularly under this second Trump administration, weigh on the USD outlook?
So an independent Fed gives the market greater confidence that the Fed can do a better job at keeping inflation stable, averaging about 2%. A Fed that can keep this promise of not to intentionally inflate too fast is important to maintain trust in that the dollar can keep its value. So undermining the Fed's independence could put the trust at risk.
Right. Well, then how might markets react if Trump were to attempt to remove Fed Chair Powell before his term ends in 2026? Is this a possibility investors should be cautious about?
Yes, the market didn't react that well to the threats of dismissing Fed Chairman Powell. But Trump has backed off after the market reacted nervously. But this is unlikely to be the end of the story. So concerns about Fed independence will weigh on the U.S. dollar.
Okay. Well, then given the prospects now, where is the USD headed, Moh Siong? Can the decline be extended?
So despite the recovery in U.S. sentiment post the China truce, we are still bearish the U.S. dollar for two reasons. First, the U.S. growth headwinds remain. And second, a rating of the heavily overweight U.S. exposure by non-U.S. investors is just getting started.
Oh, just getting started. Well, then with the U.S. dollar expected to decline even further, what does this mean for investors holding the greenback, Moh Siong? Is it time to sell?
Our bias is still to view any dollar rebound, U.S. dollar rebound, as an opportunity to position for a sustained dollar decline. And the risk of a further dollar weakness means that it's important to hold a diversified currency exposure.
Right. Well, for those who believe that investing in the US dollar is not ideal at the moment, where are those investors taking flight to? I mean, what other asset classes are investors looking into?
So as I mentioned, non-US investors are just getting started on rethinking about their overweight US exposure. So gold could be a beneficiary of the rethink. And the rethink would also favor a more diversified exposure, incrementally maybe allocating more to other regions like Europe and less to the US.
Right. Which currencies do you believe are also best positioned to benefit from the USD's decline?
We expect the dollar decline to play out in gold, as well as in major currencies like the euro and the Japanese yen. So the big shift in the German fiscal stance in favor of bigger spending on defense and infrastructure could benefit the euro and the European economic outlook further out. And the sentiment on the Chinese yuan has improved, but Chinese policymakers are likely to keep the Chinese yuan stable against the US dollar.
Well, on that note as well, Moh Siong, there seems to be a general sentiment regarding the USD where it remains one of, I don't like the USD, rather than there are currencies I want to own. So does this mean there aren't any broad inflows into the other currencies, rather a mere sell-off of the US dollar?
So gold is the default choice when investors don't like the US dollar, but find it tough to like other currencies. And this explains why gold has rallied by a much larger extent against the US dollar compared with other major currencies like the euro and Japanese yen since the start of the year.
How does this sentiment shape investors' strategy in FX markets right now?
Right now, I think investors are asking whether the weakening US dollar trend is still intact after the trade tension de-escalation. And given the recovery in US risk sentiment, our answer is that we could see some consolidation of the greenback against other major currencies. But we are still sticking with our weaker US dollar call.
Then what would need to change, Moh Siong, either in terms of US policy or global growth, for the dollar to stabilize or, reverse course?
So the US dollar may stabilize if the US economy proves more resilient than expected to the tariff uncertainty. I mean, it's certainly reassuring that the US activity data has been holding up well. But some of this could reflect a front-loading boost ahead of tariffs, and payback could soon follow.
Payback can soon follow. Well, on that note, before we let you go here, Moh Siong, what else will you be looking out for in the coming weeks that could move FX markets?
So right now, I think the focus has pretty much shifted from tariffs to fiscal developments. And therefore, besides the risk of slower U.S. growth, I'll be looking at the fiscal developments. And the Moody's downgrade of U.S. sovereign credit rating comes as a timely reminder of rising U.S. debt and deficits. And therefore, foreign investors may not be happy to fund the large U.S. fiscal deficit unless there are greater concessions in the form of weaker currency or higher bond yields.
Well, those are some great insights there. Well, thank you so much, Moh Siong, for your time today.
You're welcome.
Thank you. That was Sim Moh Siong, who's a currency strategist at the Bank of Singapore. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.